On today's Hot Sheet, I'm discussing Ivy Zelman's insights on the spring housing market, the gap between list prices and sale prices, and the long-term value of home ownership. Today is Tuesday, May 6, 2025. I am Byron Lazine, and the Hot Sheet starts now. All right, if you're just jumping in from the live BAM X role play that we did at 9 a.m. Eastern, then you know this show is live. I'm tuning in live here today from Connecticut. Let me know in the live chat, whichever market you may be in today, where you are tuning in from. Let me know if you were over at the live role play. Okay, let me know if you were in the live role play. Gary Ashton from Tennessee, from Nashville, Tennessee. Jason Flory in the house. Dawn is in the house. Lenzini. I like Lenzini. It's kind of like Lazine with a little flair to it almost. Lenzini in the house. I like that name. All right. Let us know what's going on with you. If you were in the role play, if you enjoyed it, we're doing that for members every Tuesday for the month of May and the month of June at 9 a.m. So if you're a member, just click on your calendar. You'll see those. This was today's. Myself, Tom Toole just got out of that, but we've got it available every single Tuesday. So you have that opportunity in your calendar. You see all of the upcoming BAMX events inside of school. So there you go. All right. Thank you, Kim. I saw Kim on there. Thank you very much, Kim, for being a part of that. And thank you very much, Ivy Zelman, for giving us more than just one soundbite a quarter. Very rarely do we get commentary from Ivy Zelman, and I love it when we do. Ivy Zelman, who is the founder, owner of Zelman and Associates, she gave her read on the spring housing market. Anytime Ivy Zelman talks, I listen. We're going to listen here together, break it down, and react. So I've got Haley with me here today. Haley, if we can go to the first part here, Ivy Zelman, on why the comparison to the 2008 housing market is misleading. It's something we've been talking about a lot. You can never have enough ammunition on this. There's always going to be an abundance of, people that are still licking their wounds from 2000. I get it. Okay. I went bankrupt December 31st, 2008. I get it. It was a very hard time for those of us that were investing in real estate, especially if you were like me and were doing it without any information, any credibility, didn't know what you were doing from 2004 to 2006. That was me. I get it. 2008, it stings, but some people just won't give it up. And there's no comparison right now. What does Ivy Zelman think about the comparison to 2008 and today?
The worst March since the great financial crisis. I mean, let's not forget that was a housing crash. It was a housing bubble. You remember it probably better than anybody. It was a housing crash. So the fact that activity is as bad now as it was then is pretty striking, don't you think?
Actually, I think it's misleading, given that the reason that we have existing home sales as weak as we've had them has been a lack of inventory. However, inventory is now starting to rise. In fact, the NAR reported today that inventories were up 20%. So we need more inventory to have higher turnover. And in fact, our survey for the month of March indicated that we are actually going to see pending better than expected on April 30th when it's released, though I think that improvement might be short-lived if we have continued volatility that we had earlier in April with the stock market under pressure. We've had a lot of green on the screen, so that's good news. But I do think that the numbers are a bit misleading when they're reported, what was reported for today.
Well, okay. I guess to put it differently, back then we had.
So we recap. We went over the existing home sale number. March down almost 6%. Pending home sales at the end of April went up almost 6%. There's a difference there. Pending home sales are forward looking. They're looking into the future. One of the things that we're also seeing is a higher level of cancellations. There's no question about it. Buyers are getting into a deal and then, they're letting mainstream media seep into their brain. This is a big decision. Am I making the right decision? They're staying up all night thinking about, am I buying the right house? They say the tariffs the tariff monsters are going to come out from under my bed and scoop me up in the middle of the night, and it's all going to go bad. And so you've got buyers backing out with economic uncertainty. It's real. Confusion in this market. It's real. It's really happening. Confidence is down. That's one of the factors. And then when you have, low inventory markets, Northeast, Midwest, some of these areas, you've got buyers that either get cold feet or inspection doesn't come up right. And you've got that issue. Down south, where you have high inventory, you just have buyers that are backing out. It's like, I don't know, we're getting close to hurricane season. If you're talking about the Gulf Coast, I don't know, there another property just came up. I might back out now because there's even more options. There's just confusion. There's micro markets that are different from each other. There's a lot of confusion. So cancellations are up because of those reasons. So, we'll see how it plays out in 60, 90 days. This, 6% bump up on pending sales. If it sticks, we saw closings. We know this. We're kind of recapping backwards here. Closings were down. Now, Ivy says something interesting. Inventory, which we've seen, and we covered this yesterday, continues to move up. We're gonna be at, pretty close to 2019 levels potentially across the country. We're seeing that in some areas, but we may see it across the country by the end of the year at this rate. We don't know if this rate's going to continue through the summer, but signs are that it will. And so I don't know if it's as simple as inventory going up. And obviously she's on CNBC here, so she has a short period of time. When she was on the HW, the Housing Wire debate with Logan, it wasn't really a debate, but the conversation with Logan Mohtashami, one thing I thought she said, which was right on the money. We've been saying it over and over on the hot sheet, is we don't need to just build 3 to 5 million homes. We're not 3 to 5 million homes short supply. We're in the, 3 to 5 million homes in the right price category. So if you don't get inventory in even existing home sales in the right price category, I don't know that takes care of sales because we do have an affordability crisis across the country. Let's go into Ivy's thoughts on builders. Right now, new homes are about the same price as existing, maybe even less, with all the incentives that builders are throwing in. If you factor in incentives and just don't go off close price, they probably are less than existing home sales. You never saw that. You rarely do see that, new home sales being less than existing. Builders right now have to adapt, and this is Ivy's thoughts on that scenario.
An oversupply situation and basically a demand crash. I don't know what you'd want to call it. This is kind of the opposite, right? There's no supply. There are tons of buyers out there who are looking, whether it's the entry point being slightly too high or literally just nothing available that's kind of move-in ready. So I assume that's why suddenly the price of a new home is a little bit less. They can build to the price point the market is demanding, and they can offer some incentives. Existing inventory kind of is what it is.
Exactly. And I think the existing inventory will, assumingly, if we have motivated sellers, we'll start to see not only higher turnover, but further deceleration in home prices. And I think that we're seeing that already, but I think it will decelerate further. I think the builders have been very prudent about offering mortgage rate buydowns, and the incentives are definitely elevated and continue to likely increase going forward. But I think with the existing sellers, they should contemplate using concessions and mortgage rate buydowns as opposed to, let's say, lowering their price or letting the house sit there longer. But I don't know that the realtor community is really pushing that, but they can do it.
Okay.
Elaborate on that.
That is, we'll go to the elaboration here in a minute. That's one of those points that Ivy makes that you write down. Okay. The realtor community, the agents, the professionals, those of us that are on this morning here on the hot sheet. By the way, share the hot sheet with somebody who can benefit, somebody that you care about their business growing. It's the only 24-hour look back on housing, Monday through Thursday when the markets are open. But agents, listing agents in particular, should be advising their sellers to do buy downs, to do concessions, not price concessions, not price reductions. We know 36+%, 36.5% off of yesterday of sellers are moving the price down. Typically it's a third. So that number is increasing. Take a page out of builders' books. It's the same way you want to think about your comp. Okay. If you only have one comp plan and you go in and they say, hey, what's your fee? And you say, my comp is X. And then you're just sitting there waiting for a reply. You're dead in the water. There's only one direction there is, and that's to move down. Okay. Consumers think in small, medium, large. I got 3 comp plans. Can I walk you through those? comp plan number 1, comp plan number 2, comp plan number 3. Okay, now, I really want everything in comp plan number 1. Man, that really is going to showcase my home beautifully. I think that's all the stuff I need out of my agent. Comp plan number 1, but I wanted at comp plan number 2 pricing. Okay, well, I can throw some things in on 1 to get down to comp number 2, but I don't got to move my numbers. But I got options so I can move stuff around. Okay. We had Alex Hormozy on Bam Fest. What does he talk about? Make an offer, and instead of moving on price, include something on the offer. Hey, I'll do an extra I'll do extra marketing over here. You really wanted all the level of the cleaning and the staging services I do in level 3. I'll do it at level 2 if you move forward today. But now you're getting the number that you went in there set to get. Same thing. The minute you move down on price from a seller, you're never getting that back. The cat's out of the bag. Okay. You move down on price, and then the lender comes back and says that they need flexibility. You're not moving back up on price more times than not. Once you move down on price, it's over. Let's let Ivy elaborate what she means for the agent community and how they should be thinking more like builders when they negotiate, not just on price, but in other ways.
For a second, because that would be super interesting. And as we know, when turnover is this low, there are realtors who are making no money. There are, companies all up and down the daisy chain, publicly traded or not, that are not making money. So talk about what that could look like.
I think that if a seller is getting advice from their realtor that they need to lower their price, they might alternatively contemplate taking that same amount of money that they might have reduced the price by and using and offering the buyer or potential buyers the same type of mortgage rate discount and buying the rate down. And it would be about the same amount of dollars as opposed to lowering the price. And that's a conversation that realtors say that they're now starting to have. And I don't think that it's prevalent really in any size way now, but it could help buyers move that inventory. Sellers move the inventory.
Yeah, there you go. And you're going to open up, and then you're going to open this up to other buyers, right? You're widening the pool by doing that, inviting more buyers in that can afford this opportunity. All right. Ivy Zelman, the best there is. That was great. Let's move over to what the typical home seller wants. More than the typical buyer is willing to pay. So right now, the typical home seller wants $39,000 more than what the typical buyer is willing to pay. Okay. So we got a $470,000 median asking price in the country right now. And it's 9% higher than the $431 median sale price. It's the largest gap we've seen since 2020. So these market dynamics are shifting in favor of the buyers, to particularly where the inventory is. You're seeing that in the Sunbelt states, the Gulf Coast. You're seeing this shift where it's becoming more and more of a buyer market. If I just jump into school, into the BAMX school, and go into the classroom tab, we have a hot sheet tab here for every single show. So this isn't just today. This is every day we do a hot sheet tab, and you'll obviously see the replay there, but you also get access to all the slides that we use here. Here's the gap. Okay. The gap between home list prices and sales price. It's the widest it's been since 2020. Okay. So this might be one, if you're going into a listing presentation today, this afternoon, and you've got a gap between their aspirations and the reality, this might be one of those yellow highlighter moments. You circle this, you circle 2020. Hey, what are the two things in common between the beginning of 2020 and now? Uncertainty. What did uncertainty create in March, April, and May in 2020? We always think about 2020 fondly, because we were just so relieved as a real estate community that the market ended up coming back and recovering. Well, that wasn't the case at the end of March or April or May or even into early June. There was a heavy pause. There was some wait and see. There was some uncertainty. Our spring market was the summer and into the fall. Everything got moved back. But there was a period of time where that uncertainty created just a wait and see. And so you had a gap that widened. You have the same thing right now. Now, the buyers that took advantage of that, of the gap in expectations, they were really thankful. Okay. Now, if you're in a market, Gulf Coast maybe, where the inventory is rapidly rising, a seller might be thankful that they're meeting the market now as opposed to waiting for more downward pressure. Okay. Everything's going to be a micro market dependent. But to get a seller to realize kind of, hey, if you're sitting up here are the homes that are sitting on the market, because there is a gap in expectations between buyers and sellers right now. And that's why we're seeing days on market in those markets obviously increase. There are markets like a Northeast, a Chicago, these, New York, these different places where that's not necessarily the case. List prices are growing over twice as fast as sale prices. So you've got home sellers coming to the market expecting prices that they saw their neighbor's home sell at, and then the sale prices are not growing quite as fast. And so with that, that's where we're seeing this increase in inventory that we spoke about yesterday. It's the biggest increase in inventory we've seen in quite some time. Okay, so these list prices are outgrowing the actual sale prices. The expectation, the aspirational pricing from sellers is not matching up with, hey, if you want to sell it today, we got to match up and align with what the buyer's expectations are today. Okay. There's 8 metros. Listen, there's 8 metros where prices fell from a year earlier in March, according to Redfin. They're all in Florida. They're in Texas, or they're in the Bay Area. Okay. Those 3 states are in those 7 states that make up over 50% of the building permits. So when you're looking at downward pressure, you got high builder competition there. Okay. Here's the areas where we've seen a change in median let's go list price versus sale price across the 50 most populous areas. So Anaheim, year over year change in median list price 9.2, but the sale price only changed 4.6. So if somebody's going to list in Anaheim at their aspirational number, understand that the difference between list price and sale price, that percentage isn't matching up. And so if I'm taking a listing and it's more at the aspirational figure, hey, we're going to negotiate this number. Here's what's happening across our market. Over the last year, list prices have increased 9.6%, but median sale price have only gone up 4.6%. So when we get offers, our list price, our marketing price, our initial offering price isn't going to be what we're settling at. Here's why. Important conversation for listing agents to have if they're not going to get the appropriate number figured out. I mean, Atlanta's got a 6.3% increase in median list price, but a 0% increase in median sale price. Austin, they got a 3.7% upward trajectory on median list price, but their sale price is down 1.6%. Okay. Cleveland, you're having the opposite impact, 4.3% impact, but the actual sale price is up 11.8%. One of those low inventory markets. Dallas up a point, but down a point on reality. Okay. Fort Lauderdale's up 3.6%, but only up 1.5 when you look at what's actually happening. LA's cut in half, similar to Anaheim, 10.6% up on the list price year over year, but only 5.6% on the median sale price. New York, 9.5 versus 5.4. Bay Area, again, is going to negative, so up 2.3, but reality's down a full point. You got markets like in the Northeast holding firmer. Providence is up 10% on the median list price, and they're up 7.4% on the actual sale price, on the median sale price. And there you go. There's just some of those differences in those key markets across the 50 most populous markets per Redfin. Okay, what's the value of being a homeowner? Okay, this is a piece from Rezi. Love what Lance does. Had him on Knowledge Brokers Pod number of times. a couple times anyways. Love chatting with him. And so what's the long-term value of home ownership? This one here is something I'd be sharing with am I paying too much? What's going to happen? We always talk about 12 years, the average homeowner tenure. Okay. What's the long-term value of being a homeowner? Okay. This story here is told by the 1995 home buyer theoretical, right? Home ownership has been an effective vehicle to help American households build and preserve long-term wealth. No question about it. But if you just say it and don't back it up with the statistics, which we've got in here, it can just seem like realtor jargon. Okay, U.S. home prices from March 1995, last 30 years. Here's an easy one to remember. Last 30 years, U.S. home prices rose 300%. Okay, it's a Freddie Mac house price index. Last 30, 300% up. Okay, California, you're up 400%. Florida, you're up 400%. West Virginia is the lowest, so 160%. So I guess if you're in West Virginia, you can't say it, but nationally up 300%. Mississippi, you're up 160%. Okay. Can't help you there, but those numbers are still great. Okay. 160% West Virginia, Mississippi. It is what it is. Here's the kicker. Every state, including the two low appreciators, outpaced consumer inflation over the same period. Okay. Did your rental outpace inflation? I don't think it did. Did paying somebody else's mortgage outpace inflation? Probably not. Okay. Here are the baseline figures in 95. U.S. home sale price in March 95, 130,000. The average 30-year fixed mortgage rate. Get ready. Throw it in the live chat if you know it. The average 30-year fixed mortgage rate in 1995. I mean, I think to wrap pricing around people's minds, there might only be two stats. And the last 30 years were up 300% on home price appreciation. And 30 years ago, the 30-year fixed rate was 8.53. We're under 7. 8.53. 30 years ago, if you bought it, you're up 300% on home price, and the interest rates were higher. What do you think is going to happen fast forward 30 years? Probably the same thing that's happened the last 4 decades. Compounding home price appreciation. That's what we've seen. Here's your state. Okay. You can find it on the map. I'm going to throw this inside of BAMX. So, grab it out of school if you're interested in using this. 400% Florida, California, 354% up there in Massachusetts. Okay. Nevada's almost at 300%. You got some of those areas in the Midwest that are below 200%. Guess what? Those are the states that are appreciating rapidly over the last 12 months and probably do fairly well over the next. So there's affordability in those states. People are realizing it. Okay. Here's the 30-year change statewide. The 30-year change on interest rates is they're actually down from where they were 30 years ago. Okay. Most buyers are going to purchase with leverage. Okay. 3 out of 4 buyers last year used a mortgage. Okay. So they're going to take a down payment and use a mortgage. Okay. So when you calculate the returns, like a 300% increase in home value is even a higher return. If you only put 10% down on a $300,000 house, but you get a 300% return on that $300,000, what'd you get on the 30 grand? You got a pretty good investment. Okay. You got opportunity cost, obviously, to factor in. Warren Buffett over the past week was talking about how easy stocks are. Well, yeah, but you don't have the safety that you have in real estate. Like almost every every home is a winning stock. Okay, so it's harder to get a home, no question about it. But when you get one, I mean, it's almost like a guarantee win. It's like buying Facebook on the IPO. It's just gonna work out. Okay, but there's a lot of stocks that don't work out. Okay. You could invest in the stock market, but you got to live somewhere. You can do both. More homeowners own stock than tenants and renters. Hey, I'm going to rent because I'm going to invest everywhere else. Well, the data says homeowners have all the investments, not renters. Homes aren't just an investment, though. They provide the shelter, the stability, the access to a school district, to being able to do what you want to the house. Okay, I just got back yesterday late in the day up here to my Connecticut house. And there's always something going on. You're always doing something, right? But when you own the house, you can do things. We've got a mail in our neighborhood. The mailman comes right to the door. You can have a little mailbox right next to the door. It's very nice. I don't like mailboxes on the street if you can avoid them. I don't like the look of a mailbox on the street. So I like that. I get there yesterday and I'm like, we put the new mailbox in. I don't like where it went. Okay, well, it's my house. I can move it. I can cry about where it went, which I did for a little bit. I'll have you know, because now we got to move it. I want it on the right side of the door, left side of the door. Let me know in the live chat. Where should the mailbox go? I think the right side is the only side. Here's a 30-year fixed, 30-year shift rather from 95 on March 25 with other categories included. Okay. Total personal income up 312%. What do you know? More people make, the houses are going to fall in line with that. They've relatively held firm on that. Okay. Outside of the great financial crisis recovery, they're pretty much even with personal income increases. U.S. rents are up 176%, weekly earnings up 152%, and U.S. consumer prices, inflation up 111%, outpacing inflation is your real estate investment. Okay, these are some of the charts. They're inside of BAMX. I'd be using on having that long-term conversation. A lot of buyers got Uncle Billy in their mind. Okay, what does Uncle Billy think? Been living in the house the last 30 years. Okay, if he only knows about home prices from 95, of course he's going to think everything is high. Can't factor in the next 30 years. Uncle Billy won't be here if he keeps hitting the bottle. I have an Uncle Billy. I'm not talking about my specific Uncle Billy, but I might be. The average 30-year fixed mortgage rate during the first week of March 2005, it was 8.53. Look at how long we sat up above 5% and how little time we sat below 3. It was a blip on the radar below 3. Those days are long gone. They're not coming back this year, that's for sure, and they may never come back. Okay. You had after 95, here's the other thing. The 95 buyer had multiple chances to refinance. Early 2000s the rates dipped below 7%. Post 2008 financial crisis fell under 5. And then obviously the COVID era. So, I mean, if you had your house since 95, you had these opportunities to get out of that 8.5. Not a guarantee. I'm not one of those people who marry and date. No, I mean, if you're married, you're married. You don't date. Okay. If you're dating, you can date. But I don't think you should marry the house, date the rate. But in reality, looking back, if you hold the house a long time, there's going to be fluctuations. And maybe you can, refinance that loan at a different time. It's just another point, obviously, that's out there. All right. That's the big picture there. The big picture on the 1995 homeowner, a home buyer, they've done really well. It's impossible to say what the next 30 years are going to look like, but the last 30 years, if any evidence means that the buyers today are going to be quite fine, and just show them that information, they'll make the decision for themselves. Most of them want the utility of home ownership. That'll be the comfort that they need to say, you know what? I think if I can ride out some of the storms, I'm going to be doing pretty good. 10-year today, not doing really any better than yesterday. Still elevated from where we were a week ago, 4.355 on 10-year. We've got a 30-year fix that didn't make any moves on May the 5th yesterday. It was 6.9. It ended the week prior at 6.9. We've got the FOMC meeting kicking off today. CME Group says 95.5% chance they're not going to move that rate. It's going to be all about what Jerome Powell says tomorrow. We'll cover it on Thursday morning. And so there you go. What do we got coming up here this week? Later today, here on the YouTube channel, we've got a new Real Word pod. The free and simple way to support all the YouTube content we put out is just subscribe, hit the notification bell so you get, new content notified when it pops. We'll have a new Real Word later today. I'll be back live tomorrow, 9:30 on the hot sheet. BAMX members, if you missed the role play today, we're doing it every May and June at 9 a.m. So Tuesdays, 9 a.m. before hot sheet, we're doing the role play, me and Tom Toole. Lisa missed today, but she'll be back with us next week. Tomorrow, we have a live members only live with Chris Benjamin. That'll be tomorrow. Kaylee, what are we doing that one on? Do you know? Let me see. I've got it here. He's got a content conversation on how to build a six-figure business by using content, by staying behind the camera, letting the content speak. So that's going to be Chris's live tomorrow inside of school. Obviously, all of the content that I've shared here today on today's hot sheet is going to be available. So that's available for members. Just jump in. Oop, I don't want to watch the replay. Just jump into the classroom, and all of that is there. Also, I'll finish with this. For the week ending last week, top 10 housing markets for cash offers. Okay, that's about 1 out of 4 buyers, so should be aware of it. Per Zudilio, it's Denver, it's Phoenix, it's San Antonio, Vegas, Gilbert, Arizona, San Bernardino, Lakeland, Fayetteville, North Carolina. Probably butchered that.
Don't ask me. I have no clue.
Haley, you're supposed to know this stuff. You went to UConn. I don't have a degree. Atlanta, Charlotte. Okay. That's also in there for you guys. All right. That's your hot sheet today. I'll be on Real Word later today. Until then, of course, toodaloo.